The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition. Yes, I say exciting. Edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, the koala bear of Wall Street. Just sitting here chewing on my eucalyptus leaves, just quietly minding my own business. And a market is coming along to try to make me unhappy. I don't know why a market would do that to me. Actually, other than the total lack of movement, I actually have one stock that did crater today that we were short in the Tech Insider. So I guess I'll be happy about that. But of course, I'm always hoping for a cornucopia, a horn of plenty of positions paying off all day, every day. But what can you say? Probably not for anybody alive this day. Anyway, when we look at a market, like I said, not bringing you a lot of warm and fuzzy feelings about a direction. When we look at the S&Ps out here, basically we're flat, not 0.8 of a point. We were down about 7 points lower than we were at now, and up about 5 points, and we're at the same point now, and probably on hold till the FOMC meeting tomorrow at 2:15. So what else do we have going on? Actually, for a day that normally should have fairly light volume, actually a little bit better volume than yesterday, closing out on 1.9 billion shares on the New York Consolidated Tape. And I think we had about 1.7 or a little less at this time yesterday. So a little bit of up, a little bit of down, and a lot of waiting until tomorrow. Normally, the prototype for these FOMC meetings is a slight sell-off into the FOMC morning. And we shall keep an eye on it. And why digress? If I had a couple of charts. Maybe we'll do history later. I wanted to get to the most important thing. I've got two charts that really are making me kind of giddy. The first one, if you're watching on Tiger TV, are the margin debt and NYSE debt. And this is margin. And we are back up into the margin areas that we saw in 2000, 2001, in 2008, and 2009. So if anybody tells you that the margins are not up there, and this is actually at the end of June, I've got the data, but we're up another 2%, according, I think it was Trim Tabs that had it out, another 2% up here in the last couple of days. So we've got some fairly significant margin debt when you look at the broad markets. And, of course, maybe just a little less if you look at the S&P itself. But the broader stocks out here that aren't in the S&P actually getting even more margin. A lot of discussion over the last few days on financial infotainment about whether or not we're in a bubble. And the question is, or before in 2000 it was a dot-com bubble. In 2000, 2008, it was a housing bubble. And now it looks like it's a bubble of everything. Just about everything that we look at, except really, really boring stocks, have far too much margin in it for me. This is a good example of what happens, especially when I've talked ad nauseum about the way that Dodd-Frank has made the stock market want to have a zero volatility so that it can have more and more margin. This is the proof of the pudding. I wish I could do a great pudding of what's a guy that's the comedian? The pudding. Maybe that's about as good as I'm going to get. Maybe somebody in the den will post the name. But he was an I Spy in the 70s. Did a whole bunch of stuff. Mr. Huxtable also. Maybe someone will remember. Bill Cosby. Just had a mental blank for the moment. We got our pudding. He did those pudding commercials. Pardon me for my very poor, if ill-advised, test of he was pudding in Jell-O. You always have room for Jell-O. Bill Cosby did. Anyway, as we look back at these, I've been talking about the lower the volatility, the higher margin that these folks would go after. Of course, they're all chasing returns, and it doesn't really matter what happens when the rug gets pulled and the music stops and the musical chairs. It's how much money that you can tell your customers you made on the way up. When the market decides to crack, there's not a whole lot you can do other than go short. But I think it was, what's today? It's Tuesday, isn't it? It's not Wednesday already. I'd be scared. Boy, these days just fly past. Anyway, this is Tuesday, and of course we've got the FOMC meeting tomorrow at 2:15 from their website. But I want to show you this because if you've been around long enough, you can see that how every time that we get excessive margin in these markets as a percentage of the market itself, it becomes extremely problematic, and we have huge pullbacks. Just know that we can see a great deal more of high volatility. And one of the things, especially the new book from Nassim Taleb, talks about anti-fragility, and that you want people to fail often and fail early so that they know what works and where not to put their hand on the stove. If you keep kids away forever, they wouldn't know what the heat was on the stove. Sometimes you just got to get burned a little. And unfortunately, the Fed has made sure that no one gets burned to the most of the extremes. And that makes a market that's even more fragile. Plane wrecks, as bad as they are, and all the dead bodies. In fact, it's in the FAA arena, in accident investigation, they call it the tombstone mentality. When someone dies, they make changes in the airplane. And that kind of fragility, while bad for the people that died in the airplane, is good for all the rest of the people, and why flying is probably about as safe as you can get. When things fail, things get fixed. Unfortunately, of course, in the stock market, it's all about grandstanding politicians. They always come along after every kind of blow up and come out with some kind of hugely bogus or horrible ideas. In this case, Dodd-Frank. You can probably say that Glass-Steagall was problematic, but it did tend to work over the long terms, but you had to get rid of that. So, what can we say? Just know that you are on sand. This is not a market that has a footing on bedrock and is made by margin. And what margin gives, margin will take away in the blink of an eye. I actually had it, and I don't know where it's at. Well, this is the other one. So I will, let's go back to this for just a second. I put in my newsletter also a warning, and that warning is about the hedge funds and the hedge funds leaving. Last week, for inflows, there was about almost $9 billion coming out in hedge funds. They were huge sellers last week. Only about $800 million coming in from those hedge funds. They tend to lead the market, and the mutual funds tend to be next. So watch out very closely. If we don't have a lot of money to replace that $8 billion coming in, that will be problematic. Trim tabs basically talking about a flat cash in, cash out window dressing session. So I'm not really worried about a lot of upside, at least today. Maybe the trim tabs data will change tonight. They are a company that basically looks at fund inflows and outflows. I found this margin debt slide from dshort.com, and it is just a little bit behind. We are, I think, another 2% up and higher on the margin debt as of the last couple of days. So keep an eye on that. And know that hedge funds are getting out right now. So watch, especially if your stock has a huge hedge position in it, hedge fund position. The other thing that really is catching my eye today is this TBT. It is the ultra short Lehman 20-year Treasury ETF. And while the energy coming out from this $80.28 high back around the just before the end of last year moved down, the energy, especially over the long term, probably just slightly less than the energy back up from last May to the highs in August. But what I really do see is extremely light volume out here. And actually, we've had a test. And if we close back above 58.23, you really have to start looking at this bond market and what's happening in it. So we'll keep an eye and look at this before the end of the day. But at least on volume, as we do break that lower $58.23 low that had 6.2 million shares, we're going to have to see how that volume comes in today and whether we close back above that 58.23. And of course, this discussion would be incomplete without talking about cash. And I mean, we're talking about the dollar. We're talking about the sawbuck. We're talking about Benjamins, bucks, cabbage, cheddar, clams, dead presidents, dough, greenbacks, lettuce, long leaf, green, sawbucks, 10 spots, wampum, and yards. We're talking about King Dollar up at $81.20. And it looks to me like we wanted last year to go up to $84. It looks like the governments are trying to do everything to keep the dollar from being strong, but certainly it looks like when we look at gold today off $4.50 back below $1,300 on the forward contract, that it is problematic, to say the best. Anyway, we have a interesting day setting up, and of course the calm before the storm in FOMC, and get back in just a minute. Got a little bit more news out here before we get into the stocks at the bottom of the hour.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at DirectionFunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And starting to get some discussion about what I'd been talking about for a while this week. And a lot of excuses for the auto industry right now. But one of the things that we are starting to hear, in fact, I think I heard it and saw it in a lot of articles on Friday, was, you don't need to worry about those subprime loans in cars. You don't need to worry about 8-year financing in cars. You don't need to worry about anything. No, we should give everybody a free car. And the whole point was that there weren't a lot of repossessions right at the moment. And that's fine. There weren't a lot of repossessions till the housing market went south. And that's the exact same problem. But at least we're starting to see some worry, and I have a feeling that that worry is coming from some of these charts out here. And, of course, we warned about General Motors. It kind of created – you have to really worry about Ford and it making a long-term top out here. Ford Motor Company, of course, went up against this October 24th high from 2013 at 1802. 71 million shares went in to it with 53 million shares and have been rolling over ever since. And, of course, General Motors has its own problems, but this thing looks like it's ready to go back down to the about $33 level and go test that high-volume low that we have out here from April 11th. And if there's a company cranking out more probably bad loans than anybody, if we do get an economic downturn, it is General Motors. Of course, they sold off their old finance division, but and we're back to the hair of the dog in this market, which is extending a lot of loans and not taking a lot of money up in cash up front. So just keep it That's it. Well, anyway, I digress. Financial engineering and land banks are back. In 2005 and 2006, there was no end to the amount of Kramer-inspired talk of land banks and spreadsheet heroes. These are all about financial engineering and not really making the company any better. Of course, when I saw Wynn take off this morning and the press releases, they really had very little to do with what you might think is a big deal for a company, i.e. making more money. I thought maybe that they'd been doing a lot of work in trying to make more money in rural areas for internet. And I thought maybe some of those WiMAX systems had really started to pay off. Then you start digging back into it. And basically now everything's running because, of course, just like 2000, 2005, 2006, it is just one of those things where, well, if they can do it, I can do it. And, of course, my stock is going to be higher because we're going to do all the same things. We're going to spin off a REIT with all the real estate that we hold here, and we're going to take that cash out at the IPO for the REIT, and sayonara, see you later. We'll pay rent, which is probably a good indication that at least business real estate may have hit a high. But everything's pretty much running out there, and it's all about financial engineering. Of course, a lot of times it's a long-term deal, and we're having a lot of discussions on financial infotainment TV these days about inverse takeovers, of course, trying to get out of the United States to pay a lower rate. Of course, a lot of people talking about trying to find ways to put barriers up to leave this country. And my thought is that you put up a wall in East Germany to keep people in, not to keep people out. And that's probably the biggest way you can tell whether your country is a big steaming pile or if it's a great country. If you want to leave, more power to you. Man, we can't let just anybody in this country. And just the discussion is kind of getting on the super edge of despicable, as a lot of people don't believe in a capitalist system in America, and they have to be reminded over and over again. But I'm ready to start getting a wiffle ball bat and start beating on some of these guys and ask them, can they really be that stupid? But anyway, these companies probably can eke out a little bit longer. And yeah, when we talk about the king, we're not talking about that creepy king from the Burger King commercial. We're talking about the real thing, the dollar. King dollar. We'll be back in just a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And after the bell tonight, Amgen, Anadarko Petroleum, which I'm expecting to probably be weak. American Express, which I think could probably come in line to a little lower. Buffalo Wild Wings, of course, they're going to be off a quarter. I don't know exactly when it ended and whether or not they got the whole soccer thing going in. Football. So be interesting when their quarter cut off and whether they got any of that cash in that quarter. That's kind of close enough that I think it was 14 days ago. So they may have gotten some of that cash. That may be a high water mark for it. Boston Properties. This is going to be a very interesting one from the way I look at the charts. DreamWorks Animation. Of course, they've been the whole movie business pretty horrible. So not expecting a lot from them. AGL Resources, Green Plains Incorporated, Newmont Mining, Regal Beloit, Sequoia, SQNM. I love that stock about 10 years ago. I made a just absolutely killing. I think it went from like $1 or $2 to like $8. I mean, it had to be 2004. And of course, the granddaddy of what everybody will be watching out there tonight, which is Twitter. And kind of hard to tell what these guys are making and what they're doing. So I'm going to wait and see what happens after that. It is a mad market. And, of course, hopefully we've got somebody that's not that mad. Rich in Orlando. How you doing today, Rich?
Doing very well, Dave, and yourself?
I've got some sun tea here. It's quit raining. It's still very humid, but I think I'm doing good. I think that rain may have gotten rid of those no-see-ums. So those things have been after me like I've been sugar or something.
Oh, they're
I don't
terrible.
know.
The no-see-ums are just absolutely terrible.
If people don't know, if they haven't been down here in Florida, no-see-ums are these tiny little things, so tiny they go through, even can go through the screens. You have to have like a extra tiny screens to even keep them out. But they're horrible little tiny things that bug you. And they've been bugging me for about the last 10 days. Anyway, you wanted to look at what?
V-Jet. It's Voxajet. I believe they're a 3D manufacturer. 3D
they certainly are, and it's this is, I think, one of the companies I bought at an IPO and ran it for a few bucks and made some cash out of it. Made a lot more cash being short this thing. And here is what's going on. Of course, I think it's either tonight or tomorrow night. We've got 3D systems. Is it tomorrow night?
I don't know.
Yeah, I'll verify it here, earnings date. Yeah, the 31st. So Thursday. You've got 3D systems, which really is kind of everything is following it. So today what you have is a extremely highly shorted stock. One of the other things that these guys did is they went to the well and issued more shares. So I don't know. Are you talking about a 1 or 2 day play in VoxelJet, or are you talking about something
what caught my eye was back here in early July. It had that high volume. You know, it was moving up, and then it had a high volume top, and it's sort of been pulling back with lower volume. I mean, really low. I mean, there's not much trading in the first place.
Yeah.
But that's what really caught my eye is the fact that it had that movement up, and then it had a high volume top, and now it's been pulling back on the lighter volume.
Yep, and if you could get this thing probably back into that mid $14 range, that's probably where you would want to buy this thing.
Okay.
The reason for 3D being such a kind of interesting sector, there's a lot of plays. What VoxelJet does is make these things that are the size of warehouses. I mean, they make incredibly large 3D printers.
Okay.
But they don't make a lot of them. I think they had, when they went and IPO'd, they had made less than 24 of them. But they were kind of famous. Did you see the last James Bond movie where they destroyed the Aston Martin?
No, I did not.
I forget what the name of it was. It was about his parents' house or something out there. Anyway, if you watch it, that Aston Martin that was worth, I don't know, $15 million or something, they scanned it all in and built it with their printers. So, I mean, they've got some stuff that's very interesting when it comes to large-scale 3D printing. But the question is just how many people need to own one of these things, and it's more of a service business. And they went to the well when 3D was hotter than a Georgia asphalt road in, of course, this July. And it's been problematic since. And, of course, it got turned into a football of earnings. And I got out fairly early on the way up and could see that this thing was going to blow apart. And I think we got it, I think, short twice in the newsletter and made some fairly big wood on the thing. But it is a stock that needs to come out here and base out for a while and let the hysteria die. And I think you're probably in that $14 range. Not too bad. You could have bought it when it closed back above the 1406. What's the other one out here?
There would have been no motivation to do that. That would have been before the move.
Right. What I was going to say is that you didn't really have any volume below that 1406 level. It went to 1285. As soon as this thing closed back into the trading range at 1406, which was what, about 616, you could have bought that and taken that ride. That would have been one place where you could have bought it. Now you kind of need to wait until this thing gets back into that trading range, which is probably 14 to 15 bucks, and touches it lightly. And again, there's no volume, and then you're going to have a nice trading range between 14 bucks and 27 bucks. But you just need 3D Systems to report and not disappoint. Probably the biggest thing is 3D Systems, like I said, went back to the well, issued a lot more shares. And if this thing doesn't blow out, I think it'll blow up. And that'll take all these stocks with it. So I would say that the risk far outweighs the reward until after 3D Systems reports on Thursday. Now, VoxelJet, let's look at their earnings date just to make sure. Okay, they basically reported last time on March 28th. So do you have the reporting date? Their next reporting date? So that'd be May, June, July. I mean, that'd be awful close. I don't know why I don't see their next earnings date. I'm going to have to go look that up. Maybe I'll get a chance to do it at the break. Let's see if we've got any headlines on this thing. But what I would hope is you get a mild dissatisfaction or unsatisfaction from 3D, and you get this thing back in 14 or 15 bucks, because I think that's where you're going to have to be on this thing to get the risk reward correct. See if there's anything else up here.
I know in the past you talked about Maxwell, the capacitor manufacturer.
Yeah. MXWL.
Yeah, right.
Yep.
You have any thoughts about them? I mean, it pulled back quite a bit, too.
It certainly did, and I don't know if you heard the conversation I had with the gal that called about it. And
I did not. I'm sorry.
Okay. Well, it was probably, 2 months ago. And I said, this is a company that's either a $10 company or a $1,000 a share company. And what you have to do is see them have something that truly has the storage capacity of a battery, or get close, right? And the problem is they still haven't made that hurdle, although when I was hot on them, they were saying that they did. Basically, all those people are gone or fired or killed or sued. But they were basically stating that they were going to get the kind of capacity that would equal batteries. And this technology far exceeds any kind of thing that Tesla is working on, far exceeds fuel cells. The problem is, do you need to have a trailer with enough of these things on there to power your car? And that's it. Can they get more energy density? Can they get more storage in a smaller space? And that's still the issue. And I think when she called, it was probably in the 16s or 17s, I said, I still haven't seen one thing that said that they actually did get that. And I think that were rumors back when this thing really started to run back in January, that's exactly what they'd done. But again, 2-3 quarters later, nothing out the door. And what they have does work. It's just they need to put basically 20 pounds in a 1 pound sack. And if they can do that, then they're a $1,000 company. And you could get, this is one of those companies that could be a 10,000% return on your money. Mm-hmm. They have to get to that point where it's at least as good as lithium-ion batteries. If they did that, they'd be a $300 or $400 company. If they can get the same that you can get in a lead-acid battery at the price points, at decent price points, I rail a lot about solar stocks, because the solar panels are going to die in 10 years on somebody's house. In 5 years, they're probably going to only be producing 75% of the power. There's nowhere to store them. This technology would work great with solar cells, and maybe even make solar cells usable. So, I mean, there's from cars to solar cells. Like I said, this is a super hot area. And every time I open stuff, I just quit talking about it. You find that someone's saying, hey, we've been able to do it with graphene. And 6 months comes along and you can't even find those folks anymore. So I'm really waiting to see. I'm willing to pay up for this stock and wait for some sign that they truly do have the technology. But if they make it work, it's going to be, worth everything. This is going to be Intel, Microsoft, and Google all wrapped into one.
Mm-hmm.
But they don't have
but
it
they've got to be able to deliver, and they're not delivering. That's
and
the problem.
they haven't delivered. Technically, it is feasible. The question is, how do you get that kind of density? And a lot of people have been talking about graphene because it can be basically made in sheets at 1 atom thick. But then there's some other technical issues of actually getting some air between there to make a capacitor. Basically, a capacitor is just, a lot of times it's 2 sheets of metal with some air between it, and it can hold static electricity for a very short amount of time. If you can get the density, a lot of those sheets just a few atoms apart, you could get that kind of density. The question is, can you get the cost right, and can you get the manufacturing on it right? Can you get the thing to work right? But, it's got every benefit in the world. I used to use these super capacitors on some of the things I designed just to hold a charge while you unplugged it and keep the clock running. And some of the devices I worked. But, those things were about $1 or $1.50 a piece. This would be something. The reason I would be so high is if you buy a Tesla, you've got to probably in 5-7 years you got to replace a $20,000 battery pack. There's no reason why to think you can't replace the individual cells, and for the most part, the cells are going to last somewhere between 10 and 20 years. So the total lifespan of a car, you'd have these things in, you could recharge the entire car in 3 minutes. Which I think is a big kind of...
big plus. Yeah, it'd be a big plus if you could recharge the car in a couple minutes.
Yeah, instead of a battery. And, of course, that's probably, we see Tesla going up against Toyota. They're going to use fuel cells, and they can recharge in about 3.5 minutes. But that's also somewhat problematic. But the best solution for everything in the world, from solar cells to electric vehicles, would be if they could get this supercapacitor stuff working. And like I said, I got sucked in the first time, and fool me twice, shame on me, right? So right. I'm going to be a little bit extra careful, especially with this company, although the chiefs at that time that were running around saying that they were 6 months away were probably really, by a factor of 10, probably short. But we're 3 years into that, so maybe in another 3 years they do it. And they've got the cash. They've got all the right people working on it and everything else. There's other people in this area, too, that may not be public that may come out with a solution that may not be Maxwell.
Okay.
But I'll guarantee you that well, you never know. Chemistry is a very hard thing, which is one of the things I put up against Tesla and building their gigafactory for batteries. Trying to actually get quantum leaps in chemistry is incredibly tough. It just doesn't scale out like semiconductors, right? You don't suddenly get 100 times better semiconductor in 5 years from now. If you can get 5 or 10% better, that's a world change in chemistry. Anyway, if you want to hang on, we'll be right back after the break.
Appreciate it. Thank you.
You bet.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, it is still have our caller on the line, and that is Rich from Orlando. So, Rich, you've got yet another question. Let's go ahead with that.
Yeah, you were mentioning graphene just in reference to what we're talking about here, but in the past you were talking about graphene, and it seemed like there weren't companies that were publicly traded that were involved. Has there been any development where there's companies, publicly traded companies
not that aren't scams? There's a lot of scams out there that people talk about being graphene oriented and doing all this, but you need to have people using graphene, and right now all they're doing is chewing up bits of it and putting it in stuff and saying my skis have graphene in it, so there's kind of a marketing scam on it. But for the properties that I'm talking about, like electrical properties and not building, but actual, making chips out of them or making supercapacitors after them or something, there's nobody using them on a huge scale. There is one company that has made a kind of a spray out of it, and it's spraying the graphene all over the plastic wrap in store displays. So if anybody tries to open them, it goes off. You know how they have the kind of spider-looking things on some, like electronics and stuff, and they have to take the spider thing off of it? Basically a replacement for that. But I don't see, it's not a huge business where someone's going to make tons of money and go public. We need somebody to make a supercapacitor. We need somebody to replace copper wire with graphene wires. We need, there's got to be some kind of, at least in the software business, they called it the killer app. I don't know if you've heard of that before, but it was the app that made computers, and that was the spreadsheet in 1980 for Apple and Apple IIs and all those MBAs. It really accelerated and made the computer a thing that was in everybody's office. Word processor too, but for the most part, it was all those MBAs getting out of college in 1980, and wow, I can use the spreadsheet to do a ton of stuff.
My spreadsheet, yeah.
Right, and so that made the computer business. Graphene could be made by something like supercapacitors. That could be the killer app for it. It could be wires. It could be semiconductors. It could be, it would make semiconductors 10 times, 20 times, 100 times faster. In fact, IBM's made one that makes probably for the NSA, you never really know, that's running at about 400 gigahertz for some spy satellites. I'm surmising and reading between the lines because they don't really tell you. So there are some applications for this thing that are literally out of this world. But mass applications for them, just not yet. And that's where you're going to have to see it. A lot of people trying different ways to make graphene. It's tough to make it without flaws. Basically all the same problems that you had with silicon and making silicon chips. So not a great answer out there, but someone's going to come up with something, and it will have a killer app. There's just too many different ways you can use this. It's just nobody's done it yet. And, if I could get maybe Maxwell back in here at $7.50 or $8 or something, maybe I'll just hold on to it long term and hope that they actually do one day build something that is of extraordinary magnitude. Anyway, thanks for the call. And we're just about ready to go. And
Thank you.
Congratulations to Andy Heck. He'll have his hour on at 5 o'clock tonight, but he's going to be the commodities guy for what is it? Ask.com. Yeah, going to be pretty cool. So we'll look forward to him at 5 o'clock, and of course, Anadarko.
Since 1984, Basil Chapman